Hello, ladies and gentlemen. Welcome to the show on this Tuesday, July 9th, 2019. Now, the first point I want to make is we're going to talk about Deutsche Bank, and we're also going to talk about Chinese auto sales later in the show. Let's get started. Let's open up the charts right here, and let's take a look at the silver price today. Now, silver price has been moving upwards this morning. 15.05 bid. 15.14 ask. So the spot price is 15.14. We're looking at up 3 cents on the day, and let's take a look now at gold. It's down $2.20 on the day, $13.92, but the price is rising on gold right now at this minute. So it's heading back up toward $14 again. Let's take a look at cryptocurrencies. First thing we'll take a look at cryptocurrency market capitalizations. Now, it was up last night. It's at 345 billion right now. It was up to like 353 billion last night, but now it's dropping back a little bit today. You know, it was on a real tear, but it's still, the price is at $12,355 here on CoinMarketCap. Let's take a look at the price on BTC, Bitcoin at Binance site. It says $12,392, up 5% on the day so far. So cryptocurrency is doing rather well. Now there's a problem with cryptocurrency here. That's something that's worrying me. Hasn't happened yet, but it's worrying me. We're headed toward a recession, and recessions tend to be deflationary. And there is the entire possibility that when in the initial stage of the recession, that they might run into the dollar and as a safe haven. And in fact, I'm kind of expecting them to a little bit. During that period in time, if a panic occurs and there's a flight into the dollar, Bitcoin could take more of a beating than gold and silver. Gold and silver could take a little bit of a beating too if they run into the dollar extensively. And what they'll do is there's margin calls could go out. If Deutsche Bank fails, margin calls could go out. And what we could be actually looking at is a system that's collapsing, and they run to the dollar for a safe haven in the initial phases before the Fed reacts. You know, this is what I'm worried about. After the Fed reaction, they print a whole bunch of new money, then there's nothing to worry about. You'll see Bitcoin go up, you'll see gold and silver go up. In fact, that'll be the start of the real big bull run for everyone. But I'm a little bit worried about cryptocurrency. In that interim phase, the first initial phase of and the first knee-gut reaction to the oncoming recession is if they get a collapse of, say, something like Deutsche Bank. Believe me, Deutsche Bank stands out like a sore thumb. That's why I keep saying Deutsche Bank, because Deutsche Bank is going down. And let me explain to you the reason why. Let's take a look at Deutsche Bank here. Deutsche Bank, they're beginning an exciting new lopping off parts phase of the bank. They're chopping. The chopping employees. Now let me explain to you something about this. Pretend that you are an employee for Deutsche Bank, and maybe you've been there for years. And all of a sudden, they come in, and you see the guy that works next to you. They chop him. Now, you're sitting there thinking to yourself, hey, you know what? Am I next? Are they going to give me the fire? Are they going to fire me next? Or lay me off next? This is what you're thinking. So, I would say there's not an employee in Deutsche Bank that's not going to be scared. They're all going to be scared for their jobs. And they're going to see this guy leave, that guy leave, that guy leave. Right? Well, what they're going to do is they're going to say to themselves, now, just think, if you were a worker at Deutsche Bank, wouldn't you say to yourself, hey, you know what? I'm going to go out and scout for a new job before they fire me. I'm not going to sit here and wait until they fire me and then I got nothing. And you're going to see more than just the 20,000 that they're cutting off and they're firing. You're going to see that the other ones that work there are going to start leaving too. Everybody's going to start deserting Deutsche Bank. Now, I'm going to ask you a question, too. If you wanted to be all you could be, in the same way with a bank, if you wanted to be all you could be, would you go into the hospital and tell them, well, doctors, here, I want to be all I can be. Please amputate my arm. So you get your arm amputated. And then a few weeks goes by, or months, and then you say, now I want my leg amputated because I want to be all I can be. And then a few months goes by and you say, I want my other leg amputated because I want to be all I can be. You know? Well, by the time it's done, you're going to be like a caterpillar. You know? That's what Deutsche Bank's doing. And a person's not going to function. I mean, you couldn't function without your legs and arms and stuff, right? You'd be a caterpillar. And what good would you be? And that's the way Deutsche Bank's doing. They're chopping their employees off, and they're firing everybody. How is this going to improve the bank? This is not improving the bank. This is just, the bank is just going to disintegrate in front of our eyes over the next few months. Yes, it's getting smaller. The bank is getting smaller. It's going to get drastically smaller because the employees that they decide to keep are going to leave too. There's going to be empty banks everywhere. How can they function with any sort of a business model if they're not going to do business? Basically, this amounts to getting rid of all your employees, amounts to you not doing business. Well, what's the final result in all of this is Deutsche Bank has probably got about maybe 2 or 3 or 4 months left. While their stock price disintegrates, and they slowly chop themselves until there's nothing left but a hull, an empty hull, and then they just gone. They finally fall off the edge and disappear. And during those next few months, you know, leading into this, we're going to see that this new plan of theirs is not working. It's not really a plan. It's just basically... It says, like a body gripped by frostbite, Deutsche Bank is cutting off the blood flow to failing parts. It says, well, it's just, they're just dying. They're dying slowly, but at a certain point in the end, they're just going to go fast. They're going to go fast, they're going to disappear. And this is going to create a shock to the system. At a certain point, there's going to be a realization on Wall Street, hey, this is really happening. This is real. Deutsche Bank's going down for real. And they're going to start pricing it into the markets and stuff. We're in for economic shocks coming up. Massive economic shocks coming up in the next few months. I'm worried this might have could possibly have a negative effect on Bitcoin and the cryptocurrencies, more so than gold and silver. I think gold and silver might drop a little bit. Maybe you might see a price of $1,400 on gold. You could see it drop back into the $1,200 range. You know? But that's not a massive loss of your money. Cryptocurrency, though, is a different animal altogether. It's much more vulnerable to price drops and price action and things like a depression. You know? It's much more vulnerable. So there's an awful lot more upside potential to cryptocurrencies than there is to gold and silver. But you have to realize that there's an enormous downside risk to cryptocurrencies, where gold and silver, you might not see as much upside potential, but there's not as much downside risk. So this is why it's good to diversify. You guys out there, some of you guys are all into crypto, no gold and silver. This is why it's good to diversify. Because ultimately, in the final conclusion of all of this, they're going to go back to money printing like crazy. Gold, silver, and crypto are going to go to the moon in the end. In the end. You know? But you don't want to take significant losses before you get to that end, you know? I know HODLers in the end, they're going to be happy people. The HODL cryptocurrencies, you know. But you could go through a downside risk before you get to that happy rainbow at the end, you know. And this is what I'm worried about for you guys, you know. So I'm just pointing this out to you so you know about it ahead of time, you know. And so it might not be the best time in the world to go putting your house, mortgaging your house and buying cryptocurrencies, you know. Just be careful. That's all I'm saying. Now, let's take a look at the Dow Jones Industrial Average. I think it should be open. Yes, it's open for 3 minutes. We're going to refresh the page. And we're looking at down 98 points on the day so far. So we're linking 2 down days together, yesterday and today. Let me see if we can get some charting here. Here we go. You know, I mean, we're starting to come down now, coming down off of this high that we've been on for a while now. Let's take a look at crude oil. Refresh the page, and it's up 16 cents on the day, 57.82 for sweet light crude. Now, let's go and take a look at U.S. Treasury bonds and see what the yields are going at today. We're having one of those up days again. You know, it's really, this market's been very strange. One day up, one day down. One day up, one day down. One day up, one day down. You know? And that's what it's been doing. Now, lately, the yields were falling rather rapidly. Now, the yields seem to have stabilized. You get one day up, one day down, and it's just basically staying the same. One day up, one day down. It's just going along sideways. So, now let's take a look at the U.S. dollar index for the day. And what we're seeing is $97.49 for the U.S. dollar index. It's staying strong. Now, the dollar could go stronger during the initial phases of this recession. But the initial phases of the recession are entirely different than the latter stages. And we saw the same thing happen in 2008. You know, gold and silver fell in the initial stages of the 2008 recession. Then later, remember the price shooting up to $50 for silver and $1,900 for gold, and this recession is going to be that much worse. So the effect is going to be that much worse. So if we saw gold and silver shoot up to $50, this one's going to be bigger and worse. So it's going to cause silver to shoot up higher, ultimately in the later stages. So you got to wait for the late stage of the recession, when the central banks come in and try to fix it. That's the gravy part. That's the part where you're going to see your gold, silver, and cryptocurrencies go up massively. That's what you got to wait for, and that's what your HODL for. But in those initial stages of the recession, I mean, I'm not sure about cryptocurrencies. They could go up too in the initial stages. So this recession throws an awful lot of. It's like a curveball. You can't exactly predict what they're going to do with gold, silver, and cryptocurrency in the initial phase of the recession. It's very, very hard to predict. And what I'm pointing out to you guys is the potential that it has to actually move down. Now, let's take a look at this. China has terrible auto sales. And so what they're doing is massive discounts. They're cutting their car prices by 50%. Now, you think the market would shoot up 50%, guys? 50% off on a car. You think their prices would their sales would shoot to the moon? See this little tiny titter on the end? Let's focus in on it with our chart. This little tiny titter on the end of China auto sales. Let's take a look at that little tiny titter on the end. This is how much it went up. Right here on the end, that little tiny titter on the end. Let's get in a close look at it. This little titter on the end right here. That's how much it went up. That's marked in the little red box. See the little red box? That's how much it went up with them discounting the cars 50% off. Does this tell you how bad the Chinese economy is? And what kind of trouble we're in? Because those discounts, we got car lots stretching across oceans of cars right now in the United States from an inventory buildup. Oceans of cars parked on lots right now. Those cars have a model year stamped on them. right? The clock is ticking. What are they going to do when those cars have never been driven? They're brand new, got the new car smell and everything, 0 miles on the odometer. And the car's like 3 years old, 2 years old. What are they going to do? Well, they're going to do the same as the Chinese. Huge discounts. And then people still aren't going to come in to buy. Look how tepid the buying is with these huge discounts in China. Same thing's going to happen here. Huge discounts. And there still won't be, there's nobody to buy it because nobody's got any money. We're going into a depression. So, if you're out there trying to buy a new car right now, thinking about buying a new car, you better stop and think twice. Because in just a few months from now, you could get the deal of a lifetime. And you might be surprised. I mean, you might have to buy a brand new car that's 1 year older, like that's been sitting on a car lot for a year. I mean, I haven't been driving it. It's still brand new. But it's just last year's model, But you might get it for like a tremendous discount. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.